Today my topic is functions of RBI. We have already seen in our previous sessions and we have discussed in detail also that why Banking Regulation Act came into existence, why social control was exercised, what is the organization structure of RBI and how much liberty it is having. Today we will talk about the major functions of RBI, which we generally discuss when we are having our unofficial discussions also, what role RBI is playing. Any newspaper is incomplete without the mention of RBI. This is the general thing which is happening in last 2-3 years, and it has become the topic of discussion even in the non-management classes. So today let's talk about the functions of RBI and how they are going to affect us. The functions are primarily divided in two categories: traditional functions and modern functions. Now, when I talk about the traditional function, the first one is note issue authority. When I say issue of currency or note issue authority, it is only Reserve Bank of India which is authorized to issue currency notes above 2 rupees and above in the economy. It is the only one which is authorized to destroy the currency and coins which are not fit for the circulation. And it has to maintain a sound supply quantity of the currency notes and coins in good qualities. It has to keep in the form of gold and foreign securities as per the statutory rules against the notes and coins issued, though in last 10 years this system has also changed. The second is banker to the government. While performing all kind of monetary transaction, the government takes the help of Reserve Bank of India. It is Reserve Bank of India only which is working as the banker to the government. That means if any scheme is being launched which is having monetary transaction with the public, with other country or any other segment of the economy, in that case it would be Reserve Bank of India which will be facilitating those transactions. Banker to the bank. Reserve Bank of India is known as the banker to the bank or lender of the last resort. That means first it will be ensuring that all the banks which are there in the banking system in India, they are performing well, they are maintaining all the rules and regulations, they have sufficient funds to meet the demand and supply in the economy, plus they are, if in case of crisis there is any requirement of money or any support is to be provided, that will be done by the Reserve Bank of India. And that is why when we were talking about the types of banks, we saw scheduled and non-scheduled bank. We notice it is the non-scheduled bank which do not get the privilege of assistance of RBI. That is only available in case of abnormal circumstances. But in case of all the scheduled banks, it is RBI which is banker to the bank. Monetary control. When I talk about Reserve Bank of India, the most important function which is performed by RBI is monetary control. Monetary control, when we talk about, it is talking about the money supply in the economy. And because of the money supply, if the pressure of inflation or deflation is there, that has to be controlled by RBI only. It is done with certain quantitative measures and certain qualitative measures. When I come to these measures in a holistic way, first is bank rate. That means it is the interest rate which is at which RBI will provide loan to the banking system, which include commercial and cooperative and development bank, all of them. If suppose bank rate increases, the money supply in the economy decreases. When this decreases, the inflationary pressure goes down. Now, when I come to cash reserve ratio, it is the amount of cash, certain percentage of the time and demand deposit liabilities which are there with the banks, the percentage has to be kept with RBI. Okay, at present this is 4%. That means if a particular bank is having a deposit of 100 rupees, 4 rupees will be kept with RBI in the form of cash and only 96 is available to lend to others. Now this will actually protect the interest of the investor. If suppose CRR increases, the money supply in the market or in the economy decreases, again the inflation will go down. And whenever we want to create more demand in the market, we want people to use more money in the market, the CRR decreases. Similarly, with statutory liquidity ratio, it is a certain percentage of the demand and time liabilities of the banks which are to be kept in the form of specified securities as notified by Reserve Bank of India. Generally, these securities are central government and state government securities. But this is not kept with RBI. It is actually in the market in the form of investment, and banks earn an interest over that. Okay. Now, open market operation is the fourth measure which is being used for monetary control. In case of open market operation, Reserve Bank of India, by way of sale or purchase of government securities with an objective to adjust the rupee liquidity condition in the market on a durable basis, does the sale and purchase operations. When RBI feels there is excess liquidity in the market, it resorts to sale of securities, thereby sucking out the rupee liquidity, and similarly vice versa. Selective credit control, though this method is not being exercised after 2000 except for the sugar industry, in this particular case, selected borrowers for the selected purpose depending upon the use to which the control tries to regulate the quantity of the credit, the direction towards the credit force. That means if I want to promote a particular industry or put a particular curb on a particular industry, selective credit control would be utilized. Manager of foreign exchange. This is also a very important function of RBI because Foreign Exchange Management Act 1999 and before that Foreign Exchange Regulation Act FERA just specified that it is only Reserve Bank of India which can deal with buying and selling of Indian rupee and foreign currency, and the value of the currency is being decided by these buying and selling operations and the transactions in the international market. Moral suasion, it is very similar to selective credit control. That means sometimes our Reserve Bank of India advises the commercial banks and cooperative banks to perform certain tasks and not to perform certain tasks. Though there is no legislation and no legal binding for that, but on moral grounds, banks are advised to take up certain type of programs or schemes and forego certain types of investments. That is called moral suasion. It is a psychological function which is being performed by RBI. Clearinghouse function. In case of Reserve Bank of India, the commercial banks which are operating in India, whenever they are borrowing and lending to each other, that clearinghouse function is being performed by RBI only. That means it facilitates the flow of liquidity from one bank to another easily. And wherever the RBI agent is not available, State Bank of India take care of this clearinghouse function in the other parts of the country. Regulatory function of RBI or the banking system. When I talk about the regulatory function of RBI in the banking system, primarily it talks about licensing. That means Reserve Bank of India has the right to cancel the license of any of the bank if certain conditions are not fulfilled. These conditions we have already discussed in detail on our classes. Control over the top management. It is Reserve Bank of India empowered by Banking Regulation Act which can decide, advise anybody to take up the position of the director or chairman or CEO in a particular bank or forego that particular position. Okay. Branch expansion. It is important to take approval of Reserve Bank of India before opening a new branch. If RBI is satisfied with the performance and profitability of a particular bank, only then they are allowed to open a branch in a new segment. Power of inspection of the bank. Reserve Bank of India reserves the right to inspect the account and books of any bank at any time at their own initiative or at the instance of central government in case of discrepancy, and may order winding up of that particular bank if there is a discrepancy. Promotional and development role. It is Reserve Bank of India which advises the development of the quality of the banking system in India. We will be talking about Basel II and Basel III norms, which are providing the framework for improvement of the quality of the assets of the bank, so that the problem of non-performing assets can be removed. It performs a wide range of promotional function to support the national objective. The certain kind of a scheme, if we talk about the Jan Dhan scheme, which was backed by RBI, implemented by commercial banks, was a kind of promotional functions which was promoting financial inclusion. To established financial institution of national importance, for example NABARD and SIDBI, we have already seen when we were talking about development banks that it is all these financial institutions which are having government control are the subsidiary of RBI to cater the demand of a specialized segment, niche segment. For example, NABARD is talking about the development of rural and agriculture area. SIDBI is dealing with the small development of small scale sector. And liquidity management system, every bank has to ensure sufficient liquidity by classifying their assets into standard, substandard or loss assets and making provisions, keeping prudential reserves against those assets. This kind of liquidity management system is being supervised and developed by Reserve Bank of India.